Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the focus today is on metals, and within that as well, we've seen the iron ore prices continue to gain quite strong. Actually, they are the only ones who are the best performers and closing this year with nearly 25% of gains in 2023. How is it looking forward into 2024 for all of these metals, especially iron ore? For a question on that, we are now joined by Peter McGuire of XM Australia. Peter, hi, thank you so much for joining us. Season's greetings to you. And I'll start with metals first. And even as 2023 wasn't such a great year, the markets do believe that the next year could be even better. How are you looking at the overall sector to begin with?
Well, season's greetings and all the very best from Sydney, Manisha. So thank you. Look, we've got to be very mindful. It's been in one way, it's been range bound. 100 to 140 has been the price over the last year. So it hasn't seen those big blowouts that we saw in 2021 when it hit 220. So I think it's probably up from here. I won't be surprised, possibly a little bit further upside considering the infrastructure and what's happening as far as shipping and the demand picture from China. So, yeah, let's see if it's 150 can be taken out and possibly even 160 by the end of the first quarter, Manisha.
With the kind of gains that we've seen, and the point being that 60% of iron ore clearly gets consumed in China. But while the property sector is not doing so great, Peter, would you say that infrastructure, auto, shipping, these industries have continued to be strong?
Absolutely, Manisha, and that's where the demand picture is, and we're conscious as far as the overhang with property. But yes, from a demand side, you've had big infrastructure and all the infrastructure that goes into power generation and shipping and all, as I mentioned, in autos. That seems to be where you've seen a fair bit of the demand, and I don't see that really waning anytime soon from internal demand in China. So we've just got to see how it pushes forward. They account for, well, there's the chart. I was going to say it, it's a huge component. 70 to 75% of global demand comes from China. So it's just quite extraordinary, really, isn't it?
It is. And as you mentioned, $160 a ton is a possibility going forward in the next year. So it's going to be a higher price than what 2023 saw, but way off from the all-time highs that we saw in 2021 at around $230 or thereabout. Do you see a consistent, structural, stronger bull run continuing for iron ore?
I think it's going to be I just want to see how we go in the first quarter, Manisha. We've got naturally Lunar New Year, and I want to see how the Chinese buying is. Traditionally, you'll see possibly an uptick as far as buying in that February period and possibly into March. But then I just want to also keep a close eye on what's going on with the stock market there, because it certainly hasn't performed well this year. And that's another part that needs to be considered. But I do feel as though that there's a little bit more upside. It's going to be good to be a holder of mining stocks, Manisha.
So iron ore continues to gain, and mining stocks are expected to do well as well. Peter, how would you look at the non-ferrous metals also? Do you think the whole sector actually can perform better than what we did in this year?
Well, you would hope so, because it's been fairly heavily punched down. And when you're looking at it, I thought that possibly oversold to the downside. And I wouldn't be surprised that it bounces. And, as they say, a rising tide lifts all boats. Maybe the first boat that's been lifted is iron ore, and some of those other ones might get a little bit of a giddy up there. So quite possibly, Manisha, you'll see a little bit further uptick for those as well.
The only positives actually in metals that we've seen in this year have been in copper, which is 2% up. Tin, of course, has seen better gains, but then we don't follow tin as much. And then it has been iron ore. So when you get into next year, would you, and we are off the kind of lows that we saw in this year, whether it has been aluminum and zinc as well. So when you go to the next year, how would you rank up metals in sense of bullish accumulation?
Well, you've got to be, keep an eye on copper. I like that and naturally, and that's always been a barometer. It's just under 8,600 a metric ton on the LME. So it's had a little bit of a rally up, considering where it was. And that, again, might be the the second cab off the rank. First one being ore, second one, and then we'll just see how the others go as far as aluminium, lead, nickel, tin. But you've got to see strong demand. And I think that still the world is relatively fragile. So we've just got to see again. 24 is going to be one very, very special year, Manisha.
It promises to be like that. So finally, what are the fundamentals that you will watch out for? I mean, I know we're looking at supply disruptions, we're looking at China, we're looking at interest rate cuts as well. But what's your sense on where could be the next game changer coming from?
I want to see what goes on as far as geopolitical tensions with the Houthis and what happens there as far as look at what the cost is to transport goods in the sense of shipping, and the blowout that you're going to see if that Red Sea creates a bottleneck, and it's a choke point similar to what we see with oil going through the Strait of Hormuz leading into the Suez. They're going to sail all the way around Africa to come up and service all of Europe, Manisha, and they're big consumers. So this is going to add to inflation, and it's going to add to the cost of shipping, and that's what I think everyone's got a close eye on at the moment.
And a final question then, Peter. So, even as we're looking at all of these, and as you mentioned, geopolitics is going to be the major one there. Do you also see these rising freight costs also add up in case of commodity prices? I mean, we do understand on what's happening with Strait of Hormuz. It's a wider, longer route, and then what's happening in Panama Canal, and then, of course, the Red Sea is another area there.
Yes, absolutely, Manisha, because like it or not, they've all got to be transported all over the world, and shipping's the only way you can really, besides pipelines, of course. But when you've got shipping and you've got such huge seas and in what we transport from the likes of what goes out of Saudi and what goes out of the Middle East, just from an oil side, and what's going into areas like Europe and going through the Suez into Europe itself, and the consumption there. So I think it's very, very delicate, and this is something that's really I think most traders are mindful of, and there could be a super spike there.
Well, absolutely. As you said, it promises to be a very, very volatile year going forward. Thank you so much, Peter, for joining us, and season's greeting it to you again, and happy holidays and a happy new year in advance. So clearly, metals could really be an area to watch out for. As Peter also said, it's going to be really about geopolitics. It's going to be about interest rate cuts, but metals and mining perhaps is an area that you could continue accumulating.